Hey everybody, it's Friday, December 12th. I wanted to explain in a slightly clearer way exactly what the channel is on an event chart. So what I did is I built this little mock system. Think of this as basically pseudocode. This is a pseudo model. Um, so this stock is XLO. We own this stock. If there's basically three ways that people use to determine whether or not they want to buy a stock when they're speculating, not gambling. Like gamblers just click buttons, but speculators try to figure something out and then try to make a press an entry. So you can use technical analysis, which is what most retail does, which is where you basically just visually look at the price chart and snap a line on there, and then if it goes below your line, you're going to buy. There's no statistical reason why that works, but a lot of people use that. Then there's fundamental analysis. This is what Buffett advocates. What you do is you look at the company and you try to figure out what it's worth, and then if the price goes below that value, you buy. And then there's the third way, which is not actually something that's well documented, which is you basically use a supply-demand curve for the company, which is what we use. Basically, we look at liquidity, and when liquidity changes is when we try to enter the stock. What the channel is it sort of sums up the market behavior for companies. It basically looks at when stocks have moved in the past and tries to estimate what it is about the company that caused people to make their decisions. So let's look at XLO. So I'm just going to put two lines on this chart here. Okay. I'm sorry, two dots on this chart, right? So let's say that is the price level with which people brought this stock, okay? Now, you can see that the stock has not actually started to go up here, but let's say that's the value they put out. What the code does is it looks at this company and it tries to figure out mathematically why people would have chosen that line. So, like in this particular case, like these are not real values. This is just, mock data. But anyway, so if that was the value with which the stock had gone up, it would try to figure that out. And then what I did is, I don't remember, I looked at a couple hundred stocks. I looked at like a very large section of the market when I was doing this analysis. But what it does is it looks at all the stocks that have moved, and it sort of aggregates what the values are for when people started to buy the stock. And it created a statistical model as to where the bottom of the stock would be for the version of the code that you have is only for companies that are pre-revenue. But so it tries to figure that out. So let's look at an example of one that's already moved. All right, this stock is LYEL, which we own. So obviously the stock has made its run. It's up from $8 to $34, right? So it's up 400%. Now, mathematically, this is what you would draw a curve, right? But the problem is that when you're in the middle of this move, you don't actually see the curve set up, right? All you're going to see is the stock continuing to go down. So what we do as traders is we try to evaluate when we want to buy it, right? So let's say that this is the average area with which people wanted to buy this stock, okay? So it's below that line. The majority of people are going to buy it, whether or not you're using technical analysis or fundamental analysis or liquidity analysis, or you're looking at event profile, whatever. This is the average position with which people would buy that stock. And then when you look at the actual event chart for LYEL, the channel that you have on this chart right here, this is the probability distribution of that prediction, okay? So like the line that I snapped was right here, and you can see right this green dot, this is an institutional purchase. Someone did buy that. And if you look at these green dots in general, you can see these are institutions who are all buying within this channel range, okay? That's what this channel is. This channel is when the code predicts that people are going to buy this stock, not just smart money, smart money and dumb money, the whole market segment. And how it's done that is it's just looked in the past and figured out when people have been buying these stocks. So I hope that explains more of what the channel actually is. And when I say that we enter on liquidity, it's not related to the channel itself. There is liquidity buying in the channel, but the channel is more holistic, and it includes how multiple different classes of market participants are going to buy this stock. We actually, the values that we look at, like this is a liquidity bar here. What was one? I think XLO actually has an accumulation signature on it. It does. You can't really see it. It's right there. But so these volume bars, this is our Bob, this is our delta liquidity, and then right here, that gold is our accumulation signature. I've talked about this before. This is when consolidation and accumulation kind of turn over. But again, you can see for XLO, you see a bunch of green here. The red is institutional selling, which is most likely someone who bought it, outside of the range and is taking tax profit. But you can see there's all this buying here. I hope that better explains things. I realize I'm not great at explaining this, but with the exception of like 2 people, there's no one who knows what we do here, so I don't really talk about it very often. All right, have a good day, guys.